Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the head honcho, the big boss, AJ Brown. Good morning, sir. How are you doing?
I'm well. How you doing, Sip?
Doing great. Today is April 26th. This is episode 130.
Wow.
There's a lot going on in the
Yeah.
market, right? There's been certain days where there's not much, and we're having to look for reasons to analyze the market. I feel like this past week we've got economic news, we've got earnings, things are
Earnings
good, things
season.
are bad, they're fighting against each other. What is your takeaway? Where do you want to begin today's show?
I mean, earnings season is in full force. I mean, Meta disappointed. Google really became like an investor-friendly symbol. Microsoft played straight. A lot of tech companies reported earnings and all over the place. Tesla is now, has been in the dumper for a while, but Nvidia pulling back a little bit. These are all companies that have had some effect. I don't with Nvidia, NVDA, right? Let me just take a quick look. Nvidia hasn't reported earnings, but Texas Instruments, who is kind of a bellwether, did, and that kind of sent Nvidia from their recent little mellow pullback a little bit higher. Good things on the earnings front, and as far as my opinion goes. But then there's also been the economic news that I guess we have to talk about, right, Sip?
Yeah, well, maybe we start earlier in the week, and I think that was driven by GDP.
GDP got reported yesterday, but yeah,
Okay.
in fact, what really happened, if you take a look at the market, is starting on Monday, people were like, we've had so much selling. Let's do some bargain buying. So there was some bargain buying on Monday, and that led into Tuesday, right? And then Wednesday, there was a combination of, Meta's sour earnings, and also we got some information on Wednesday, durable goods orders. So that was interesting. Let's take a look at durable goods orders. So durable goods orders went up, but then when you look at it minus things like cars and minus things like everything else, but the core capital goods, core capital goods are orders for like furniture, big appliances like washers and dryers and dishwashers. They came in at expectation. So what accounts for this big number in orders that was much higher than expected? We expected 2.3, we got 2.6, even though the prior numbers were revised down. I mean, that's spring orders for new cars, right? That's car sales right there, transportation. So that's interesting that there's this pop up in March for cars. But yeah, I mean, the real news came yesterday with GDP numbers. GDP numbers kind of disappointed, right? And this,
Is that a good or a bad thing? Because I always get confused whether we need that for the market or we want the bad news.
well, it would be ideal if, GDP stayed strong and inflation pulled back. When you have GDP start to pull back and inflation is going strong, right? The opposite, that begins to be, a term that we've heard in the past called stagflation, where you just can't get the inflation to slow down despite everything else. And so people had some worries about that. And I think that's why we saw some sell-offs on Wednesday and Thursday, is that these advanced. Now, remember, GDP is reported 3 times, right? And it keeps getting revised. And this is just the first pass. But the first pass came in much lower than expected. And then the personal consumption expenditures, which actually gets reported further in detail, and that was reported this morning. We'll talk about that in a second, was still kind of on the higher side. So that means that the Fed might be inclined to not lower interest rates because PCE is still high. And that actually, when we take a look at the actual report just a few minutes ago before we started our show, personal income and expenditures where expected, personal consumption expenditures, that's higher than expected, right? We expected 0.6, we got 0.8. And then when you start to factor out things, I mean, it came in as expected at 0.3. These numbers, the annual numbers, I don't know if you can trust them yet, right? The annual numbers still have some of the higher numbers. It's hard to get a moving average until they're all within a certain range. But, this was a little bit a tick higher. It all comes down to what the investors or actually what the Fed does, but also to some degree what investors think is going to happen. So I have to pull back this. So definitely investors are not expecting any rate drop in May, right? That's the next session of the Fed. Last week we talked about not expecting any rate drop in June either. But now take a look at this. A lot of people are still not expecting a rate drop even over the summer in July. Last week, we thought that there might be the first rate drop in July. Now it tends to be like, hey, we're not even looking until September. In fact, even the September numbers, as you can see here, are under speculation whether they're going to drop. There's still a slim margin that says yes, they will, but there's quite a few people who say they won't. And then you get to November, and by November, people are thinking that there's probably going to be 1/4 point rate drop, and same with December. Basically, in just 5 days' time, with some of the rhetoric from the Fed and some of the stagflation going on, investors have revised yet again. Last week, we saw a revision where investors went from thinking that there was going to be a 3/4 point rate drop over 2024 to only a 1/2 point. Now that 1/2 point is under, scrutiny, and investors, for the most part, are thinking that there's only going to be a 1/4 point rate drop, and it'll probably happen in the September, November. So everything's got pushed back. My personal fear is, Sip, that and this is just my experience of going through the dot-com bust and my experience going through, there was an energy kind of boom bust around 2005, 2006. Then there was the big 2008 housing crisis bust and a couple of little busts since then. My big fear is that the Fed won't act fast enough. And when things start to slow down, they tend to slow down quite quickly. And the Fed, I think, just like they were so slow to react to the increase of stuff, saying that it was temporary, and then it turned out not to be temporary. I'm afraid that the Fed won't react, right? And that they need to be ready to drop rates at a moment's notice. And right now they're a little bit slow, saying they have to look in the rear view mirror and see, check off their check boxes. And I'm afraid that they're going to throw our economy into a little bit of a recession towards the end of this year. We'll see if I'm right. So far, I've been right. I've only been delayed, right? Everything I said would happen has happened about 3 or 4 months after I thought it would happen. So who knows? But I think that, if the Fed's not careful, they're going to throw us into a little bit of a recession.
Yeah, I feel like the inflation data is more relevant than the growth data, right? Because that was the rationale for raising the rates so quickly, right? And now we're at these levels, and it's like, okay, we've been expecting to drop, but I guess Fed, you guys don't have a reason yet to lower the rates because inflation continues to stay where it is, essentially, right? Like we kind of want to see the numbers fall a couple percentage points to because it's been high in general. So I think what I'm seeing a lot of is the sustainability of certain industries with these higher rates, right? Like
Mhm.
we've been assuming that they need to drop, like mortgages, I think car loans, just loans in general have been expecting to have a little bit of a break here or there, and something we're not seeing that, and even more so from the data this week.
The Fed has been doing this quantitative tightening, which you would think would slow things down. But you know what I've actually noticed, and I really did a deep dive this past week. As the Fed is selling these bonds, and because the Fed has held their rates higher, right? It means that the dollar and the dollar bonds have been some of the best secure investments around the world, and especially the Japan and Korea. As fast as the Fed has been, erasing that funny money off of their books, Japan and Korea has been investing in that, like buying those bonds up quickly to kind of store whatever profits they have as an economy into some secure debt. So that kind of has been buffering what the Fed was hoping would happen with quantitative tightening. Um, they were hoping that would slow things down, but because they have a ready and willing customer for those bonds, who's as soon as the Fed sells them, they get bought up. There's still a demand, which is still kind of tempering what the Fed was hoping would happen with the quantitative tightening. The good news is that it hasn't, because there's that kind of third party unexpected customer for those bonds. The Fed has been able to kind of really sell off that holding of fake money, right, and reload their quantitative easing gun. I mean, if we take a look, and I didn't even have it queued up, but I'll pull it up right now. If we take a look at their holdings, let's take a look. Oh yeah, let's zoom into like the last 3 months. They're really just selling off those bonds, which is good because they kind of just created that money to buy the bonds during the pandemic. And so they're all the way down to 7.4 trillion of holding. It's better to have real money invested in those bonds and have the Fed have no IOUs on their books. And so that's good, right? We've
That
got a
helps
lot
with
of
inflation,
customers
right? That helps with inflation, right? In theory, the
in
the the
theory.
in theory, right? Okay.
Yeah, because the idea would be that this selling of bonds would raise the interest rates, but instead, because you've got those ready and willing customers in especially Japan and Korea who have been buying up all of those bonds that the Fed has been selling, it hasn't had the inflation reducing effect that the Fed hoped. And so the Fed's going to basically, in the Fed's mindset, they have to keep interest rates higher longer in order to make the effect. My only fear is, you know, inflation is almost a self-fulfilling prophecy. It's almost, the rhetoric, it's almost, when people start tightening and holding on to their purse strings, it becomes contagious very quickly. So I think the Fed has to be on their toes and not dilly-dally too long when they start seeing signs of slowdown, because otherwise they'll bring us into a recession.
Yeah, and I mean, just as an everyday consumer in a rather inflated part of the country, I don't feel inflation pulling back whatsoever, especially when we're talking about like service-based industries where it's like,
Yeah.
like car insurance. Like, what's the rationale behind car insurance increasing 30%? Like, it's not like it was more, you don't have the raw materials, right? So it's just, I'm hesitant on that. But that's all right because we've got some strategies, right? I know that in
Yep.
in the past couple of weeks, or at least in the past couple of months, the market has really just skyrocketed, and so it's been a great move for a lot of the swing traders, a lot of buy and hold. But as we start to pull back, and maybe over the next couple of months, maybe even over the summer, we have that chop, right? Market goes up a little bit, market goes down a little bit. We don't really move much. It's a great time to utilize a new investing tool. And that's what we have the show for. That's why you created Trading Trainer. That's the program that we teach, or you teach. And so if anyone's interested in learning a little bit more about the strategies, about the program, about utilizing options to take advantage of the potential upcoming chop, AJ's got a great daily workshop. I've gone ahead and thrown the link to that in the chat. Head on over there. We are streaming live, so if anybody watching has a name that you want AJ to review, feel free to throw it in the chat. I know that we've got his pick of the week. We've got our speed round. And when we come back, we're going to see if we can find a bottom, right? The market's pulled back a little bit, but not sure if that's going to stay. So we'll take a look at some of the charts, give a little feedback as to how you can find a bottom, some tools to help you with that. And that's where we'll go with the rest of the show. So we're going to take a little bit of a break. Sit tight. We'll be right back. While we're on commercial break, feel free to hit that like, that subscribe, that follow button, just so we can get a little bit extra love.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. How's the VIX doing, AJ? Because I know that last week you got out of the VIX position, and is there any follow up to that, or are we kind of looking for the next move?
Well, that's exactly right. We're retracing, which we would expect to. So the summary of the week is that investors have gotten a little bit of their risk appetite back, or appetite for risk. And what I mean by that is they're taking their money from that bonds market and they're putting it back into equities and putting it back into things like crypto. We even saw the price of gold kind of come back down a notch. It was trading at a high of $2,400 per ounce, and now it's at $2,350. So people are starting to put their money back into the equities market, especially as they see these earnings roll in from companies like Google. We didn't even mention, we mentioned Google, but Google really promised some stock buyback, which is going to help with the asset appreciation of their stock price. But they also mentioned a dividend. So, a lot of investors are rushing to Google despite being disappointed by the results of Meta and Tesla. Google has gotten quite a lot of investment. So has Microsoft. Microsoft kind of held through their earnings. That would have been a good earnings play. But yeah, and even the price of Bitcoin is starting to go back up. So we see investors' risk appetite come back up. And when people start to feel confident about investing in risk, we see the VIX come down, to come back to your original point. So the VIX has pulled back. What does that mean for us? Well, like we said, we did get out of our position at expiration. The position we set up was kind of a hedge position, and we capitalized big time, almost made 50 to 1 on our investment on that trade. In my personal portfolio, that was like more than a 6-figure win on that particular symbol. So that's pretty awesome. And just goes to show the power of options, right? We've been talking in the beginning of this show about just kind of general, we'd like to see the economy go up, and this is what we are. But when it comes to switching hats from the everyday, person in the Western world to the investor who has these tools of options trading, we can make money so long as we can pick up on what's happening. And so what we're going to be doing here is waiting for the VIX to bottom again. And then once the VIX bottoms again, we're going to do that same similar trade that we did before. probably looking about 2 weeks out, maybe 3 weeks out with the two spreads that we put on, but we're going to let it pull back a little bit from where it is. So it had topped out at 18. Our trade said that anything above 17 would give us the full profit, so that's what we got. But let's let it pull back. If we increase our linear regression line here on my chart for the VIX, it's kind of got, it's got this what I would consider some outlier data. So I almost want to keep it on the same path that it was and just basically continue it. So I'd like to see it pull back probably to this $14 range. And then if we see start to move back up, once we get back down to that $14 range, we'll look at putting that similar VIX hedge trade back on, Sip.
And the reason that I kind of think of the VIX, and it leads into our topic of the day, is I kind of think of it as like scales, right? So like if the market is going down, the VIX is going up. And as we saw on that chart, the VIX has been pulling back down, and we're starting to see the market go up. And I know that we referenced these color layers in previous episodes. So I guess that's kind of our topic of the day, is how do you find these reversals in the market? What's kind of the strategy? What's the logic? Where do you want to begin with that?
Well, first, a quick review for folks. So we had set up what we call these linear regression, not linear regression, but these retracement zones where they're based on the previous move from bottom to top. So now, based on that net move, we can come up with these zones that help us understand what's going to happen next. And it's based on identifying these bottom and top reversals. So the question is have we seen a reversal, and where will that reversal occur? And a lot of people think this week was an up week, and it is an up week, but we haven't confirmed a reversal. So I wanted to share with people in our kind of topic of the day, how do we determine if we actually have seen a reversal in the broad market? Now, number one, I like to look at the S&P 500 index. I feel like that particular index represents at least my watch list the best, but I actually think it represents the overall market the best, just because you look at the Dow is just a certain number of securities. And the Dow, in my mind, is, if you think about a comparison with like what's the monarchy in England, right? The Dow is like the king or the queen of England, whereas the S&P 500 is more like the prime minister, like the Tony Blairs or the David Camerons, right? The Margaret Thatchers, right? It's the one that actually is the more representative of the people, not the monarchy. So that's why I like to use the S&P 500 index. And as far as determining a reversal, I like to use a lagging indicator, meaning that, yes, it's going to be delayed in telling you when the reversal has happened, but it removes a lot of that ambiguity. I'd never want to use a leading indicator, which kind of forecasts and hope that it's telling you. That would be like an overbought, oversold indicator, like the stochastics or the RSI or the Williams percent R. Instead, I'm using just a simple moving average crossing. I'm using an exponential moving average crossing, which is a simple indicator. And in my case, I use the 3 and the 5 day exponential moving average crossing. And if you go to my website, you can download this indicator. It's free, and it's for this Thinkorswim platform. And if you take a look here, it's this one right here, confirming indicator moving average. And so you can see I've got it set. And if you want to use different values than the 3 and 5 exponential, you can totally do that. In fact, I've given you a lot of flexibility. You could even calculate this moving average on different prices than just the close, the most traditional close. You could use, for instance, high-low close divided by 3, which would take into consideration daily volatility. You can use volume weighted average price, which is a common. In my case, I'm using close, 3 exponential, 5 exponential, and I'm turning on these filters, and I even turn on the actual lines so I can see the crossing. These filters make sure that the crossing that we're seeing is a tried and true crossing versus just a kind of, lackadaisical crossing. So if we take a look closely at the price action that we've seen in just the last week, you can see we have gotten a 3 and 5-day crossing, but it sure hasn't been a confident crossing, right? A confident crossing would be one that really just deviates. Maybe today we'll get that confident crossing, but it's that confident crossing. So I don't want to see a crossing that then comes back in just a day or two. I don't want to see a crossing that just has, basically loiters around each other. I want to see a real crossing of that 3 and 5. And if I get that crossing of the 3 and 5, and to differentiate, it would be the 3 going above the 5 to identify a bottom, and it would be the 3 going down below the 5 to identify a top. So we're looking for a bottom here. And if I find it, if I get that confirmation that this lagging indicator would confirm it, I would basically go back from that confirmation and find the lowest close in the case of a bottom, and I've already got it marked here. That would be April 19th, or the highest close in the case of a top. So I'm actually waiting to see if this confirmation becomes confident, like it becomes a real crossing and doesn't just kind of spend some time loitering around each other and then comes back down. And in that case, I would go ahead and identify April 19th as my bottom. So April 19th is not the confirmed bottom yet. You can see in my bigger charts that the ones that are confirmed, I mark with the white lines, whereas the yellow line is still fluid. It's still going. And so when I get that full-on confirmation, which may come today, it may come this week, or if we decide to start trading down again, then we'll wait to see where that lowest bottom is. But depending on which zone it is, SIP, that'll tell us a lot about what's going to happen next. But that's how I determine if there's a top or a bottom that has formed in the broad market.
And just where's the beginning of this chart? What's kind of the date of that? Like a year, maybe?
I mean, I'm looking at, if I can go back as much as I want here. I can go back.
Well, I was just saying for this, for like if we're using it at scale, what were we? So that was like November. It looked like November of last year.
Typically, I like to look at 6-month charts. So the actual reversal that we saw, we went to an uptrend. The downtrend ended about the end of October, and we started uptrending since then. And if we pull back into this purple zone, it'll still be considered an uptrend. That's why you see my dotted line continuing up. It's only if we pull back not only into the red zone, but we'd have to pull back all the way below about 4,688, 4,690. We'd have to pull back there to say, hey, we're starting to downtrend. And I'd actually say that we'd have to pull back all the way to about 4,555 to actually see we're in a recession. Now, when we are in a recession, when things do slow down, we have this phrase that says, the bears like to jump out the window, whereas the bulls like to climb up the stairs. So it's not unheard of if a string of bad news right after each other causes us to sell off and go from this 5,080 that we're at right now, 5,100 that we're at right now, and drop all the way down 600 points in the S&P to 4,500. That's not unheard of, but the probability of that happening right now is pretty low. So I'm just trying to find out if we're going to have this reversal here, which will signal to our swing traders that it's time to pull the trigger on their swing trade confirmations, or if we're going to go a little bit lower, which would make the option premium sellers be the bosses of the medium to long term.
Yeah, because the reason I was kind of asking that is even if we go down to the green, it looks bad on a 6 month. But if we go out even, over like 5 years or something, that would seem like well, what is that, 2 years?
This is
Even
1 year.
even 1 year, if we got back to the green, it's like, okay, we're kind of where we were last year in general. And
It's true.
uh
You're pointing out a very important thing, which is a lot of traders, especially beginning traders, they don't look past like a week or two. And sometimes you really have to take into consideration the 6 month, the year long, even the 2 year picture to kind of have a good frame of reference for your trades, not just looking at the like last 3 days. Everybody's saying, oh, we're back on an uptrend. Not so fast. Let's wait for the confirmation of that bottom back on April 19th. We may not get it, and then it's more down times to come. And you guys who are like quick to start saying it's an uptrend again, you're going to be in the loser position. Let's just take our time and make sure we've checked everything off of our checklist in order to trade for profits, to turn these into money making investments instead of just speculative throw money at the wall and see if it sticks.
And the good thing about some of your strategies and options in general is you kind of have the risk and reward built in with the time. So you're
You're
not
right.
really looking for anything to happen other than you reach a certain date and you're either at your risk or at your reward, and it's on to the next, right? And so that's why we have the show. That's why we go over some examples. That's why we dig into these things.
Mhm.
And with that, AJ, do we want? I say let's run through last week's one of last week's
Mhm.
signals that we reviewed, and that was Norwegian Cruise Lines, which I think was you were setting up or we were waiting for something.
And we got it. We got it. So let me I'm going to switch gears here, and again, I'm using all the indicators that are for free at our website. So if you guys want to pick up these indicators, you can just go and get free access to our web portal, download them, install them. They're pretty useful. So I'm going to add 2 indicators back to my chart. I took away the one that I used, the moving average crossing that I use for analyzing the broad market. And instead now I've added back 2 indicators. One is based on the Shaken oscillator. The other one is based on the moving average convergence divergence oscillator, the MACD or MACD oscillator. And we had gotten into Norwegian Cruise Line. In fact, let me zoom in even closer here. I'm going to look at just the last 3 months. We had gotten into Norwegian Cruise Line with a initial short position. So that means we either shorted the stock by shorting the stock shares, or we could do exactly what I did, which was buy some put options that were going to act like the underlying stock, only in the exact opposite direction. So if the underlying stock lost $1, my put options would gain $1, but they're still what I call stock replacements because of that dollar for dollar agreement. It's just that the put options behave more like the shorted stock position. So a shorted stock position, every time the stock share goes down $1, the person who shorted it makes $1. Same with these put stock replacements. As the stock goes down $1, this substitute put option makes $1. And so that's how we initially got into the position when we reported it to everybody, right? We got in on these signals up here and we're able to get a good price at shorting the stock or buying the put options. And now we've got these signals, and we actually got follow through about on Monday of this day, where we actually sold our put premium, right? And this put premium, we're going to be looking for the May expiration. And we bought ourselves some protective calls with strike prices up here. And so we got these calls at bargain basement prices, and these calls will basically protect the trade. So if the underlying stock starts to work against the shorted position, those calls will start appreciating, especially if they become in the money. They'll start appreciating and offsetting any loss on that initial covering position. But at the same time, we've got that premium sold. We've set up a range that, basically it's now time passing by. So long as the underlying symbol stays in this range, we get the max profit off of both the premium sell and on when we decide to liquidate that protective call. So now it's just a matter of letting time go by. This thing's going to appreciate probably in double-digit returns for the month. It's going to give us probably just over 10, maybe 11% ROI. And we just have to see, where does this position take us? So long as it stays between those two numbers, I mean, we're in the money. We're good to go.
All right, that's Norwegian Cruise Line, ticker symbol NCLH. We've been talking about that one the last few episodes, so good to see it coming to fruition.
Doing exactly what us option traders want.
That's right, and 11% ROI isn't too bad, and I know that that's kind of in the range of many of the examples that we go through.
Yeah, there's a lot of people who can't even make 11%, in a year, putting investments into things that, I'm doing the same thing. I'm just sitting there letting it appreciate.
And with that, let's see what else is on the topic board, on the hot list for the week. This is a name that I think most of our viewers, if not all, are familiar with, and that's Ford, ticker symbol F. Let me guess. Are we seeing a buy opportunity?
I think we are, and I'm not ready to pull the trigger right now because I think it's going to come back. I'd like to wait until it comes back down. It kind of got excited on earnings. I'm a big fan of having Ford in my overall long-term portfolio as well, and that's what I've got. But so I don't mind accruing Ford because I think that that's a good symbol to have in the background of your portfolio. But I'd like to see this pull back, right? We got these signals, and these signals brought us back up to what I call the center zone of the channel. So if I were to draw support and resistance on Ford, I'd probably draw my support around $12, maybe $12.10, although I don't typically like to go on those not really round numbers, and maybe $13.25, something like that for resistance. And so you can see that I got my signal. My signals are end of day. And then before you knew it, it was already above my price target. So what I'm looking to have happen is I'm looking for Ford to pull back and give me another opportunity. I want to purchase Ford somewhere around the $12 mark, maybe $12 to $12.50. That would be my ideal place to purchase it, but I don't want to purchase it unless I get a bottom reversal signal as well. So I want to get a good bottom reversal signal and purchase it around the $12 to $12.50 mark. And that would set me up with the Ford, not only to have this at a good price in my portfolio, but it would also set me up really nice for going forward with Ford and selling call premium and buying protective puts and turning that into an income stream on Ford. So one idea that I've got for Ford is using cash secured puts. So Ford offered some interesting dividends, which threw off their strike prices. But if we look at the May 17th option, there's some different strike prices here. I'm looking here at, and again, I said maybe the 12. So if I was willing to pay $12, I mean, right now I could get 11.5 cents for putting it out there that I'd be willing to buy the stock at $12. So, I mean, 11.5 cents doesn't sound like a lot, but when you then take that away from the $12 mark, if you're willing to pay $12.50 and you say to somebody, basically, I'm willing to pay you $12.50 for your shares of Ford, they would give you 27.5 cents up front And then sometime between now and May 17th, they decide whether they want to actually sell you the 1250. No matter what, you keep that 2750 or that $11.50, per contract, no matter what. So you can use that if you actually do buy the shares of Ford to offset that price and already put yourself into the black. But that's a good way to acquire, underlying stock to then sell premium against, is to do these naked puts or cash secured puts. So if you don't want to wait for it to drop, you can go ahead and put that expectation out there and say, hey, I'd be willing to pay you $12. And for that obligation of me agreeing to pay you $12 for that stock anytime between now and the third Friday of May, you're going to give me $11.50 for every contract. I mean, it's just free money, and it puts it out there as if you've done a limit buy order at that price. So that's the way I like to buy stock.
Yeah, and there were some interesting insights from the Tesla earnings call this week in terms of the landscape, in that some of these other names like Ford, GM, Mercedes, Audi, Kia, their EVs are starting to
Gain
compete,
momentum. Yeah.
right? And so a lot of what Tesla was saying was that they're going to be shifting more into software automation, more so than and charging more so than the production, which may be a great opportunity for the inventors of car production, right, to make up a little bit of the ground that maybe they lost to Tesla over the past decade, right?
Yeah.
Something like that. So I like your long-term play on Ford just from some of those insights this week.
Tesla, speaking of Tesla, I mean, they could really position themselves because being the forerunners in this market, they've built out that whole charging network. So now renting that charging network to the other EV manufacturers, that could be a moneymaker for them. Their whole expertise in battery, as well as not just expertise, but they've ramped up the manufacturing with their gigaplants in Texas and things like that. They could be third-party battery manufacturers for all these other companies. These other companies, I do believe, have a leg up in just the ability to sell the cars, right? People have to have in their mind that they're going to go to a Tesla dealer, but people just inherently, when they need a new vehicle, they go to the big three, they go to the car dealerships that already exist, and they'd have to have in their mind that they're going to go to a Tesla, whereas it's just like second nature that somebody goes to a Ford. In other words, they can sell vehicles better than Tesla can, but Tesla has a leg up in these other components, so they can go horizontal rather than vertical and make money. So I think that the investors, of course, investors don't think any more than 3 months out. So investors have been kind of hammering Tesla. But, despite some of the kind of weird stuff that, Elon does in the, in his public persona, he's got a good business mind, and he's got a more long-term business mind. And I think that Tesla is in a great place to be a behind-the-scenes person. I remember when, back when telecom was being built out, Qualcomm did the same thing. They stopped building cell phones, right? And instead, they decided to build the chips that are in every cell phone. And so they started selling B2B instead of B2C. And that just made Qualcomm become, that company that everybody went to, all the Apples, all the Samsungs. You have to have a Qualcomm chip in your phone. That just makes sense, right? And I think Tesla is poised to do the same thing on many different fronts.
And it's not like Tesla hasn't been doing a great job of creating vehicles or selling vehicles. I'm seeing that a lot of the market, like everyone that wanted an EV pretty much has an EV now, and it's more of an adaptation of society to accept it more versus the combustion engine, which may just take time, right? So loving the Ford play, we'll definitely keep an eye on that. It's pretty simple. 12, liking it at 12. Liking it for the hold and the premium selling, strategy that we've talked about in the past as well. So we'll keep an eye on that. AJ's pick of the week, Ford. All right, we've got our speed round. We've got a couple names from our members from the audience that people want AJ's take on. And so let's dig right into it. The first name is Allie from Vail, Colorado, interested in Canopy Growth Corp, ticker symbol CGC. I believe this is a cannabis company.
Yeah, this is a weed play. They've got this is a great way if you're interested in getting into the market without actually getting into, getting in. This is a great company to do some trading against. They I think they produce all the different products that are going into all these different dispensaries, whether it's legal in the particular state or territory, or whether it's just medicinally legal. I think across the board here in the states, despite not being legal federally, a lot of the states are saying it's okay. And I think federally, I think they said that they're not going to be really pushing any of those crimes. So, yeah. So let's talk about this, Allie. First thing I want to say is that I'd like to see resistance tested. It looks like resistance is probably at about $10.25, $10.50. So I'd like to see if that gets tested, but it definitely looks like that would be the level we'd look for. And it looks like we've got some support down here at about 650. I'm using my fast MACD here, and my fast MACD has given us pretty good signals to act upon, maybe a little bit on the late side. You may have to find a signal that you'd want to react to that might be a little bit faster. But maybe the fast MACD combined with some candlestick thoughts or something like that. So far I like it. Again, I'd want to see that a top is found. I could see getting ready to either short this stock, or buying a back month put substitute, or kind of paper trading it through this next style and setting up my initial position at the next bottom, which would be either going long the stock or buying the call option. Let's look at the option chain to see if there's any interest in it. So the first thing I want to do is go out to the October option. The October option is the one that I would be using as protection in the future. Protective option, we want to go probably 3 to 6 months out. If we can, error to the 6 month side. So I want to make sure that there's activity in that 6 month out option. And I'm going to do that by looking at the bid-ask spread. The bid-ask spread in some cases is pretty good. In other cases, not so much. Looking over at open interest, there is some open interest. I'm not saying that this is the hottest option chain out there, but it doesn't look like it's too bad. And it's trading every dollar, which gives us the ability to be able to set up our option strategies, every dollar, which gives us a lot of flexibility to create some neat trading strategies if we are going to be able to, pick at every dollar to create our ranges. So I like that. I like the option chain. Let's see if there's substitute options or if we should think about trading the stock. So in that case, I'm going to want to go out at least 8 months. So right now we're looking at the January 2025 leap. And I'm looking, look at this. The open interest is very high on these leaps, which means people are thinking about these things for the long term. You know what? With the price of this being at the $10 mark, it might be better just to either go long or go short the stock for your initial covering position. But it does look like we can trade options against it once you set that up. All to say, I like it. Let's see if resistance is found at that $10 mark, $10.25 mark. And if so, we can short the stock, or I would short the stock. And then the next time it bottoms, sell your put premium, buy your protective calls, and start making some income on this weed play.
Yeah, I feel like the weed industry's been kind of hit pretty hard the last couple of years after all those states, legalized, and now we're kind of in limbo. And it's just a very interesting industry where, on a personal level, where around me it's like an Apple store, and then if you go in other parts of the country, it's like you get
Taboo.
locked up. You get locked up. Like, this is America for you.
Yeah.
Or if you're hanging with us on the show, hey, we're looking for investment opportunities and plays to make a little money there. So thank you for that, Allie, out in Vail, Colorado, leading the charge in the cannabis industry. So thank you, Colorado, for that. Bless your hearts. All right, moving on to our next name. Miles in Richmond, Virginia. You're
Oh.
part of the country. AJ wants to know about US Bancorp, ticker symbol USB.
I think Miles is part of our program because every Thursday we give comments about different symbols during our live interactive workshops with our program participants. And US Bancorp has come up week after week, and we give comments on it, but we never choose it as the one that we then, for the rest of the workshop, prepare the trades on. So I think Miles is looking for some insight. That's great. Let's take a look at it again. So US Bancorp, if I look at the 6-month chart, has been in this ideal pattern for us to sell premium on, right? It's been there since probably the middle of December. It's been in this sideways kind of choppy pattern. It's got its clear level of support around $40. It's got its clear level of resistance somewhere around $45. The signals look straightforward. Whether you're using my shaken indicator for your signal or whether you're using the fast MACD, which is the MACD on a 619 and 3. So yeah, I like it. And we've got this signal, and it looks like we got some follow through about 2 days ago. So on Wednesday. So if you missed Wednesday, it looks like we're kind of loitering around Wednesday's prices. So you could probably still jump in on this trade going long. So that means either buying the stock, or if we jump on over to the option chain and again look at those January 2025 options as a possible substitute. Looking over here at my percent extrinsic, by the way, this is also part of the free indicator, is this, options, custom options calculation. And so you could probably get along with this $30 or this $27.50 call option as a substitute. So what that means is instead of spending $41 a share, we would be spending more like $12.25. So you'd get a little bit of leverage in there with the lower price. Make sure you do your risk analysis so you don't over purchase, but you get a little bit of a price break, and it's going to move dollar for dollar with the underlying stock. So when this thing moves from 40 to 45, that thing's going to move from 12 to 17. It'll move dollar for dollar, right? And then you're set. You wait for the top to be found again around $45. You sell your call premium, you buy your protective puts. And once you've got those two trades in place, it's a matter of just letting time pass by to grow your portfolio. So yeah, US Bancorp, I like it. If you're paper trading or you're forward testing, throw that in with some of the gains you could have made, some of the price you could have purchased this at back on April 22nd or on April 24th, and go from there and see how it works out.
Awesome. Thanks for that. Miles out of Richmond, US Bancorp, ticker symbol USB. Now heading over to another part of the world. Happy to have some global visitors with us. This is Tommy in Hong Kong. Wants to know about GigaCloud Technology, ticker symbol GCT. Hi,
Tommy, in Hong Kong. Thanks for being a subscriber to our YouTube show. For the rest of you in other parts of the world, please hit subscribe. Please hit like and follow us and comment for us. That always helps us along. And I'm stoked because I know that Hong Kong has gotten some pressure lately. So I'm stoked that you guys are still following us here on YouTube. With that said, GigaCloud, I know that is a company that is creating, I believe, software solutions that allow, the movement of commerce from manufacturers in China to other buyers and sellers around the world. So very cool. Let's see. I like it. It's in that pattern. I want to make sure that resistance gets tested around this $40 mark. I see that a top has been found just over the last couple of days, but it hasn't yet gotten follow through. I'd like to see actually this top be canceled by another, bottom signal before we get follow through, and for it to go a few dollars higher before we get our next top signal. That would make this ideal. And what would I do? I'd probably short this symbol, right? I'd probably find a way to either short the stock symbol or buy that substitute put option. Let's see if there is a substitute put option. So this doesn't quite have the developed options chain that a lot of our other symbols. The options don't go past, they don't have leaps. So you're not going to find a substitute option on this, and that's good to know. You're going to have to short the stock, and then let's see if there's as much there's good activity on the option chain, or at least it exists. The activity is not bad, but it's not super good. And this is the traditional strike price increment. So the traditional strike price increment is a strike price every $2.50 up to $25, and then it goes every $5. So let's go back and look at the chart, and let's see if we were limited to trading every $5, could we create a nice option strategy? Do we have the flexibility to architect exactly what we need? I think the answer is yes. Even if it's 30 to 40 or it's 25 to 45, I think those $5 increments work for us. So I would wait for a strong top reversal. And in this case, I would either use the shaken oscillator or I would use the fast MACD, and feel free to download our free indicators to help you identify those with the clear arrows. And make sure you get your next day follow through, which we haven't gotten yet. I would make sure that's the case. And then, go from there. Sell some put premium, buy some protective calls, create that premium selling strategy next time you see a bottom.
All right. GigaCloud Technology, GCT. Tommy out of Hong Kong. Thank you, Tommy, for tuning in. Love our international audience, partially because with the options trading, you don't actually have to be right in front of the screen. You can kind of put your orders in, around the clock. And that's one of the beauties of, your strategies, premium selling, things of that nature. So that wraps up our speed round. And it looks like we're getting close to the end of the show here. Really good stuff. AJ heading.
I see one though.
Oh.
I see one that just came in. Should we look at it really quick, or do you want to end the show?
Yeah. Ticker symbol YINN.
This is a ETF, exchange traded fund, 3X ETF. I'm a little bit, so whenever I see after hours trading the way like I do here, where, the close from one day doesn't match the open the next day, I get a little worried because the options market doesn't have that after hours pre-session trading. So you could go to bed thinking that your position is in a perfectly good situation and then wake up and find out that your position now went down the toilet. So with that said, I would wait. So I guess the question in the comment section is there a short opportunity on this particular candidate? The first thing I notice is that the channel that we're looking at is probably a very tight channel. 18 to 20 is looking like where it's been hanging out since the middle of February. And that's when we think about channels, we usually like to determine if it's too consolidated of a channel. Because what that reflects is investors who, instead of are trying to do some accumulation distribution throughout that sideways channel, instead you've got investors that are confused, they're uncertain, they don't know what's going to happen next. So they tighten things up pretty tight. And so it looks like, and what that results in is that whenever a small amount of news or something hits the newsreels, or whenever some sort of trigger, I call it a tinder being thrown into a gasoline-soaked pile of rags, right? The more you make the investors, sit and wallow in their uncertainty, the more gasoline-soaked rags that are being put in the pile. And the minute that tinder hits it, poof, right? And in other words, it's a buildup for a breakout. And I almost feel like what we're seeing right now is that breakout. Now, if you're a breakout trader, yeah, you can wait for it to top and speculate and try to catch it on the way back down, because what goes up tends to come back down. But yeah, and you can definitely use a leveraged options position to do that. But I wouldn't try to sell option premium on this. Instead, this would be more of like a intraday trade, like something that a day trader would do. And I'd be very careful. I'd be very fast. Make sure you're in front of your computer screen trading this, especially if you leverage it with an option position.
Awesome. Thanks for that last minute ticker. What's the name? Hitesh. Thanks, Hitesh. And with that, we're close to calling it an ending here.
Yep.
We're closing out the month next week. The end
earnings
of the
season continues.
Is that kind of the play? It's
a lot of plays and earnings if you're up for that. And since a lot of the big companies have now already reported earnings, look for opportunities to sell premium against them. We're going to continue to watch SIP, the broad market. So we're going to continue to keep our eyes on the S&P, see if we get that reversal. If so, we're going to go back to a lot of our swing trading strategies. And even if it means swing trading is in vogue, there's still always premium trades to be found. Premium trades are always out there. So I'll be looking for those because I like those. You mentioned it a little bit earlier. When you're selling premium, I mean, timing is not as important as when you're doing a directional trade. You just have to place the trade and then let it expire. So I like those premium trades, and they're always out there, whether you're in an up or a down or a sideways market. But we'll watch the S&P and see where it goes.
Awesome. And if anybody watching, listening for the first time wants to learn a little bit more, links to AJ's indicators, links to AJ's daily workshop are in the chat. So just head on over there, follow the instructions, show some love, give us some love, hit that like, hit that follow, hit that subscribe button. And we'll do our best to hit you with some winners as best as we can next week. Otherwise, I'm excited to get back to my NFL draft. Congratulations to your Washington Commanders for the number 2 pick.
Yeah. Washington Commanders at the top there.
The Bears did get the first. That is one of my love affairs is the Chicago Bears. So very excited. Good things happening for our city. That's all I got. That's all I got for us, folks.
Take care, everybody.
All right, guys. Have a good weekend.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh